In our first series, we defined insurance and the terms that we use. We're going to see how these terms apply in the different products that we have. We have divided the products into three: products that relate to people, products on assets, and finally on investment. The products that relate to people are in two categories. We have what we call WIBA, which means Work Injury Benefit Act, and the second product is health insurance, what most people call medical insurance. Now, you remember in the first series we talked about the different terms, and we said we'll see how those apply here. The number one term that we're going to see how it applies here is pre-existing and chronic conditions. When you're buying insurance, it is important to check what the cover says about this condition, pre-existing and chronic. Most of the time, pre-existing and chronic are covered to a sub-limit. This is where you may have a cover, for instance, for 4 million, and then you realize that you're hospitalized for a chronic or pre-existing condition, and the insurance only pays 400,000. This is because pre-existing and chronic are covered to a sub-limit. That's why I said in the previous series, you need to see how these terms apply. So once you've understood copay and pre-existing and chronic conditions, then you're able to buy cover that suits your need. The other product that relates to people is what we call WIBA. Like I defined it earlier, WIBA means Work Injury Benefit Act. This is an insurance that is required by Government of Kenya for employers to give their employees. It has 4 sections. It has death, which means if employee dies in the course of duty, the next of kin will be paid a certain amount of money. It has permanent disability. This is where you lose a certain part of your body and that is not reversible. Then we have temporary disability. This is where you're hospitalized following a disability that incurred while on course of duty. And the final part of this benefit is medical expense. This goes to pay your medical bill when you're hospitalized following that injury that happened in the course of duty. Now, WIBA is usually a work insurance. However, if you want your employees to be covered 24 hours, there is an option to add what we call GPA, which is a group personal accident. That means you pay slightly more and the cover will be now 24 hours. So those are the two covers that you have for your people. Once you have insured people, the other product you want to consider is insurance for your asset. Your asset in this case will mean your laptops, your cell phones, your desk, basically things that you have in the office. Now, the risk that these things face is fire, in case fire happens in your office. There's burglary or theft. And finally, there's accidental damage should your laptop or your cell phone break. And these risks are insurable. One of the ways to decide on what cover to go for is what we call excess. We have defined this term as a certain amount of the claim that you, the insured, bears. So when you're buying your property insurance, it is important to see what is the excess charge on your product, because that means should anything happen, there's a certain amount that you, the insured, bears. So you want to know what that amount is. So excess in this case determines the office insurance that you will buy. And finally, once you've insured your people and you've insured your asset, you're in business, so definitely you've made some money. You can also invest this money. We have different products for investment with insurance companies. Some of the products, we call them endowment, which basically means that you have an investment plan, but it also has life insurance. The other product you want to consider for investment is a pension, and this is more towards retirement. You want to be able to put aside money for your future so that you're not hustling when you're young and then again when you're old. For more of these products, follow us on our social media handle, the Potter's Touch Insurance Agency. Thank you.